Hello, everyone. I think everyone can hear me well enough, yes? Okay, perfect. Thank you so much for joining me on this stage today. My name is Samantha, and I'm a regional sales manager at STR for Northern and Western Europe. What I'm going to talk to you about today is an overview of hotel performances across the Benelux market, as well as Europe in 2022, and then also give you a bit of a pre-taste of what future performances are going to look like in 2023. So to start off with today, what I would like to do is just give you a little bit of an introduction on who STR is, what we do, and then we'll go into the more important part of this presentation, which is the actual data. So to start off with, STR, who are we? Well, we are the world's largest hotel data provider and benchmarking provider with over 77,000 hotels worldwide who submit their performance data to us on a daily, weekly, and monthly basis. Thanks to all of our hotel partners, we are able to report back to our customers on 8,888 different hotel performance perspectives of hotels around the world. And that enables us to be a partner to our hotel clients and to any other type of client that we have within the company that have an interest in the hospitality market, whether it's revenue management companies, sales and marketing, finance, development teams, and so on. So before I start with the actual presentation of today, I thought we'd just think about the year that's gone by and what is waiting for us next. First of all, what's clear, COVID is definitely behind us. People have gone back to travel. We've spoken about revenge travel in the leisure segment quite a lot. So we are looking at what is going to happen in the next months and year to come. Obviously, we cannot take away the fact that a recession looms in some markets. For other markets, that recession has already started, albeit softer than what some people were expecting. Leisure pent up is spent up. So by now, people who wanted to go back and travel with their kids, with their families and loved ones, with the money that they had managed to save during COVID, that money has been spent up now. And so we are going to look at a slight shift in leisure travel in the next months. And finally, business travel has bounced back. Certainly not to the extent of what it was in 2019 and prior, but we are seeing a comeback of people that are traveling for business. So what are the travel attitudes latest? So at STR, what we do every quarter, and we've started that trend, especially after the pandemic, is that every quarter we have taken a survey of a travel panel of 20,000 people that are across the United States, Europe, and the rest of international. And we've recorded their answers in terms of what their travel sentiment is and what are the trends that they are seeing in their own travel habits. So one of the things that we've recorded is that, well, first of all, COVID is now definitely not a prior reason why people would stay away from traveling. What has taken the more important piece now of their decision-making is the cost of travel, for one, but also their financial burden in terms of household costs. So you can see that trend really growing and COVID-19 becoming much less of a factor in the decision-making of why to take a trip or not. For those who have decided to take a trip, location was the number one decision in terms of, okay, where do I want to stay? Do I want to be somewhere central, or am I looking for something that's more out of the city center where I want a more quiet holiday, perhaps? And then the terms of accommodation as well, the various types of accommodation, we've seen an increase in interest of those who have undertaken travel in staying in the more traditional type of hotels, whereas that was something that perhaps had decreased during the pandemic because they were looking for something where they would feel a bit safer and more distance from other people. Like I said before, business travel sentiment is starting to come back. We are definitely still not at the same level as we were prior to the pandemic, but the decrease in business travel is becoming smaller with each coming month. And then finally, we also asked the travel panel, for those who had undertaken business travel or who were planning to undertake business travel, what the reasons were for those business trips. And the number one response that we heard back from them was to have in-person meetings with colleagues or clients. So all of that has led us to the actual performance and what we are going to see in the future months. Globally, out of a constant figure of hotels that we have analyzed throughout the pandemic and across 2022, STR has recorded that global travel, global demand has ended 2022 at just 8 percentage points away from its figures in 2019. When we break those numbers up, we can see that continents across the world have improved on their performances. They are getting closer to what they were in terms of occupancy levels in 2019, except for China and the rest of Asia, which are a bit of an outlier. Obviously, their travel restrictions have lasted much longer than for the rest of the world. But across the globe, things are becoming much more positive in 2022 and beyond. If we look at it from a percentage perspective, so what is the recovery percentage, we can see that Europe is currently at 90% recovery in terms of occupancy levels that they had recorded in 2019. Looking more closely at European gateway cities, here as well we can see those figures split up once again. Big part of European markets have reached just close or just over 90% of percentage recovery. Amsterdam sitting just a little bit further away from that, but that has a lot to do with long-haul business that hasn't really come back into Amsterdam just yet, as well as the conference and event business, which takes a very important part of the city's demand. Overall, we are seeing positive figures. Obviously, Central and Eastern Europe being just a little bit more distance away from their recovery, which has a lot to do with the current war in Ukraine as well. But looking at how the various countries have performed over the last 6 months, what we can notice here is that specifically for the Benelux and Western Germany, or Germany overall, their recovery levels are still below the 90%, so there is still a bit more work to be done in terms of the occupancy in these markets. But we are definitely seeing an improvement with a slight dip over the first quarter of 2023, but things are looking brighter if we look down further into the year. So looking at the various sub-markets in the Benelux, we are seeing a strong beginning of the year for Bruges and Maastricht. Again, this is a percentage versus the occupancy levels of 2019. So we are talking here of not pure occupancy levels, but recovery percentages versus 3 years ago. And when we split this up in terms of brands against independent hotels, or if we look at which regions across the Benelux have performed better or have managed to recover faster, we can definitely see that the regional markets, independent hotels, have been faster last year to recover in their performance versus the brands. And now let's look at the ADRs. ADRs, what you're looking at here is a split between nominal ADR and real ADR, so that one which is affected by inflationary rates and the one that is stripped off inflation. So in terms of nominal ADR, we are still seeing a constant growth in rates, but if we look at real ADR, we can see that this has now pretty much evened out and plateaued with performances in 2019. Here again, in terms of percentages, recovery versus 2019 across the globe, and again, except for China and Asia more specifically, but the rest of the world has recovered and has surpassed its ADR performances of the pre-pandemic world. In terms of European gateway cities, except for Helsinki, which is a bit of an outlier, but no other European market has not being able, hasn't been able to surpass, sorry, I wasn't being able to find my sentence, hasn't been able to surpass its performances in terms of ADR. So we were really seeing a very nice recovery and surpassing those levels of the pre-pandemic years. And then again, looking at European countries in general for the past 6 months, here we're seeing even for the Benelux and Germany, whereas in demand we're perhaps just a little bit behind the rest of Europe, but in terms of ADR, again, performances have been able to completely recover and are still in their recovery trajectory into the first part of 2023. Benelux submarkets then here again, as well as Western Germany submarkets. Some have been a bit more slower than others, specifically in Germany, where we're seeing ADRs not as high as the rest of the Benelux. That has a lot to do with the fact that they are very dependent, once again, on conference business and the perspective of inflation as well, which has had a very large impact on Germany, more than it may have perhaps been here in the Benelux. And then here again, in terms of the recovery, the winner of the ADR recovery, I would say, would be again the regional markets. But here, contrary to demand, both branded properties as well as the independent hotels have pretty much been able to recover at almost the same level by 1 percentage point difference. Now, what we've seen for the global perspective and in Europe as well is that the luxury hotels have really been those that have been able to drag ADR recovery and pull it up with them, whereas in the economy sector, they were really performing on top in terms of occupancy levels. So this is how hotels have performed across Europe. If we look at the Benelux, more specifically, we see that that performance is more evened out between the economy sector and the luxury. So recovery is not that far away from each other, whether you're on the higher or the lower end of the spectrum. Sorry, I made a mistake there. So we're looking at branded hotels. My mistake. Branded hotels have been able to recover more in the luxury segment, whereas if we're looking at the independent segment, we see a more evened out performance in between the various hotels in the market. And now we get to Germany, which is what I wanted to talk about. We're seeing, again, the luxury segment being able to uplift their ADRs more than the other segments, who were not very far behind, but still not as high as the luxury. And then looking at the performances of occupancy and ADR across the Benelux in 2022, we're seeing quite a homogeneous performance, I would say, in terms of occupancy levels across the various markets, with some ADRs being able to surpass that of other markets more. But in terms of occupancy, we're not seeing huge differences. So if we're just looking at those figures as a whole, Belgium and Netherlands both ended at 63% occupancy, with Luxembourg ending at 60%. So not very far away from each other, whereas in terms of ADR, the Netherlands have really been able to pull those prices up more than the rest of the region. And then in terms of RevPAR performance, this has ended in most cities being able to reach the high 90s or even surpass the 100% recovery, with just Amsterdam being dragged down a little bit, but that has more to do with its occupancy rather than rates. And now looking at the differences between branded hotels and independent hotels and how those have performed in the past few months. So what we can see here is that looking at Amsterdam and the rest of the Netherlands, independent hotels have been able to perform at a stronger occupancy level, both in the capital as well as the regional markets. In terms of the index, we can see a recovery pattern which is pretty similar for all segments. But then here, when we look at the performance in ADR, once again, stronger performance for the independents, with Amsterdam definitely being at a higher recovery level than the regionals. And then that is, again, an overview of the recovery of ADR performances between branded and independent hotels across the Netherlands. Except for a few dips towards the beginning of 2023, we don't really see much difference between the various segments. And then looking at the various submarkets across the Benelux, so whether we're looking at Maastricht, Rotterdam, The Hague, Utrecht, again, that pattern of recovery is pretty much steady and quite similar between all of the various cities. So that is a good thing to see, both in occupancy and in average rates as well, where all have managed to reach that recovery stage. And now looking at travel patterns between business and leisure. Looking at Europe overall, we are seeing month by month a recovery in business travel. So if we're looking at weekday stays in Europe, we are seeing this recuperation in demand. Weekends as well have been able to recover, with some months having higher increases than others. But overall, the leisure segment has pretty much recovered, and we are still working on the recovery of the business traveler. And if we're looking at our forecasted data for business and leisure recovery across the globe, what we're seeing is that it's really going to be the international travel that is going to take a longer time to come back, whereas both domestic and business travel is either already recovered or is going to recover within 2023. Again, here, looking at, from a European perspective, looking at group performances, this is really where the hotel industry is still suffering and is still in a need of recuperation. Group demand has still not been able to get back to what it was in the pre-pandemic years, whereas the transient demand, as you can see here very clearly, has managed to recover its performances. So in 2023, we think that we are going to be sitting at more or less 5 percentage points away from occupancy levels in 2019 across Europe, and that is for weekly performances. So still a few more percentage points to work on before we get to that 100% recovery. And then looking at occupancy performance and percentage changes between Amsterdam and the rest of the Netherlands. Again, here we are looking at a few more percentage points where Amsterdam needs to recover towards the rest of the Netherlands in terms of its occupancy. On the other hand, in ADR, Amsterdam is making bigger strides than the rest of the Netherlands, especially in the past couple of months, last 3 months now since the New Year's, where we're seeing the Netherlands matching up to the ADR that Amsterdam had prior to that. And then in terms of performance in Belgium, we can see that Brussels is definitely catching up on the provinces and is closing in by February. So a good start of 2023 for the capital of Belgium in terms of occupancy levels. And then in terms of ADR performances, we can see that the provinces have had the stronger hand in the past couple of months. So again, looking at how business travel is trending and how the recovery is going, comparing the various capitals or big markets within Germany and Netherlands, we can see that the month of February has really been the month where hotels have managed to see that recovery in the business segment. January was still a bit slow, but February definitely has some peaks. And as we progress within the month, we can see that increase in weekday occupancy levels. And then in terms of ADR growth, they are quite various by cities, but for the most part, now that we are hitting March and February is over, we can clearly see that ADR recovery has already been established by all. And when it comes to leisure demand, that is slower to recover and is also slowing due to, again, the popularity of the leisure travel in 2022. So that recovery of weekend stays is now becoming a bit slower than the differences that you would have seen back in 2022. And same counts for rates, of course. On the other hand, we are seeing quite a positive outlook for the Amsterdam market. So this slide basically tracks occupancy on the books for, what are we looking at here, the next 3 months for the market of Amsterdam. So you can see that versus 2019, which is the dark line at the top, the market of Amsterdam is really closing in with a performance of 70% plus in terms of occupancy for the month of April and May. In Brussels, on the other hand, we are looking at a shorter lead time in terms of bookings, but again, a big improvement on the recovery from 2022, post-pandemic. And then when we're looking at the various submarkets in the region, we are seeing again the popularity of weekend trips or how events and conferences are attracting demand into the various Benelux submarkets. Looking at the first half of the year as well, definitely things are looking great for Bruges. So for those that have hotels in that city, keep doing what you're doing. It's probably looking very positive on your end. And then when looking into Germany here as well, although they're having a bit of a harder time to recover, but the events are definitely having their impact in terms of occupancy levels and are improving their recovery stage as well. And then looking at the performance of what we would call staycation markets, so for the local domestic travelers that would have undertaken trips within the Benelux during 2022 and 2021, you can see here how from one year to the next, summer months have evolved quite well in terms of occupancy, whereas rates were less impacted. But even so, if looking at those figures, occupancy was just aligned with the occupancy levels that hotels in those markets would have had in 2019, whereas their ADR soared versus prior years. And then finally, looking at the Christmas period again, which is another time where people would undertake trips and would have probably stayed within their domestic markets, pretty much an alignment between 22 and 21, so not much of an evolution in terms of occupancy and slight differences in terms of ADRs as well. And now in terms of an outlook into future years and what we are forecasting. So again, as mentioned at the beginning of the presentation, we cannot look away from the fact that we are facing a recession, still not exactly sure how that recession is going to impact various countries and markets across the world. But what is certain is that in the UK and here in Europe, we are the first to be feeling the impact of inflation and of the recession ahead. That will then also have as a result that the recovery will be weaker in terms of an economical growth across the world. And again, looking at that intra-regional and long-haul business that is going to take longer to come back. Having said that, though, we are still expecting growth in terms of international arrivals into 2023, although soft. But we cannot forget that with the return of Chinese travelers since the month of January, that is also going to have its impact. And we're not sure just yet how much that will potentially affect countries in Europe, as there is a delay in terms of having to renew passports, visas, and so on. So the recovery may not come as quickly as expected, but that will certainly have its impact in the months to come. And then, of course, we can also not forget the importance of the American travelers, especially for Amsterdam, which have, I think the latest figures were about 10% of source markets coming into the market. So these travelers will also have their impact as long-haul travelers come back into the destination. So looking at the 10 top source markets again for the Netherlands, repeating what I said before, but just broken down into various numbers, we're looking at short-haul travelers recovered, so whether they're coming from Belgium, even from the UK, we are now looking at 24, 25, starting to completely recover from the pandemic years. And it's again that longer haul market that is taking longer to recover. So in 2024, occupancy for European cities will still remain just below pre-pandemic numbers. And it will take a little bit longer for things to go back to what they were. And in terms of rates as well, we are starting to see a slowdown in the recovery of rates. So rates will not keep on growing as much as they have in the past year. And we are now seeing things starting to slow down a little bit more. So this is what I've just mentioned. And then in terms of GoPar performances as well, there is going to be a harder time for certain markets more than others. Obviously, Paris has had a fabulous year in 2022, whereas Berlin in Germany is looking at things from a very different perspective. So the demand into the Benelux markets is obviously going to have its strongest impact in the second quarter of 2024. So we need to just be a little bit more patient for things to completely go back to what they used to be pre-pandemic. And in terms of rates, like I've already mentioned, they will start to slow down, and that will probably happen in the second half of 2023. So in conclusion, what are the takeaways of today's presentation? From a global perspective, the world is pretty close to being completely recovered in terms of demand. Room rates have recovered in real terms, but they are now plateauing, and further growth in 2023 will be more difficult. Business travel is back and with potential to keep on growing, and leisure segment is becoming softer than what it was in the past year. And then finally, in terms of a future recession, the industry is still quite resilient to it, and we will just have to wait and see what will happen for the rest of this year. Thank you very much. Now, if anyone has any questions, I think now will be the time to ask them. No? All right. Glad to see that everything was clear. Perfect. Thank you very much, everyone. Have a great rest of the show today.